Howdy, folks. Welcome. My name is David Cobb. I have the honor of serving as the Executive Director of Cooperation Humboldt, one of the hosts of this event. In addition, I serve on the leadership of the California Public Banking Alliance. Before we get underway, I want to acknowledge that I am sitting in Varghese, also known as Eureka. It is unceded Wiyot territory. And as part of the land acknowledgement that we do at Cooperation Humboldt, we also lift up the fact that we, along with many other organizations, are going beyond a near land acknowledgement. As important as that is, we also pay 1% of our entire gross income to the Wiyot people as an honor tax. I want to be clear, this is not a charitable donation. This is a tax. It is a self-imposed tax that we pay as an acknowledgement of the fact that we are occupying unceded Wiyot territory. And it's a place for us to open up a conversation about what that means. And I want to say, as a young activist at the University of Houston, I participated in the reparations movement. And that was all about trying to get Congress people to support John Conyers' bill, as important as that was. The nice thing about the honor tax, y'all, we don't have to wait on government. We can do it ourselves as individuals and as organizations. The next thing I want to do is actually acknowledge that this gathering to talk about public banking is being brought to you by Cooperation Humboldt and the North Coast People's Alliance and the Humboldt Democratic Party and the Humboldt Green Party and the Humboldt Del Norte Central Labor Council. In other words, what we're seeing here is the progressive left actually uniting and working together in ways that we often talk about, but so seldom actually do. So I want to take this moment to acknowledge the co-hosting organizations and also to acknowledge in the crowd, we have the chair of the Democratic Party, Danny Kelly. We also have the chair of the local Green Party, Mark Adams. So thank you both for coming. But wait, there's yet one more acknowledgement. Already I can see that we have County Treasurer John Bartholomew and Blue Lake City Council member Olivia Obadiah Dunn in the crowd. And if there's any other elected official that is in the crowd that I have not mentioned, please type it into the chat so that we can acknowledge you. So in essence, what is public banking? Well, not to be too coy, y'all, but it's as opposed to private banking, right? Private banking, which is how every bank in this country, except for one, the Public Bank of North Dakota, every other bank is actually owned privately by shareholders. And the business model is to, yes, provide services, but all for the purpose of providing a return on investment to the shareholders who actually own the bank. That's what makes public banking unique. It is literally banking for the public, by the public. There is no profit motive for other shareholders because they don't exist. It is literally a way to democratize finance. It is, in my estimation, one of the most transformational concrete projects that we can work on today. We actually are going to be joined by two amazing speakers, and I'll introduce them one at a time. The first speaker is a colleague of mine on the California Public Banking Alliance. Jake Varghese is a professional software architect and amateur policy architect. He spends most of his time fighting for public banks and progressive policies, although as he tells me in his bio, he still finds time for generally goofing around. Jake's a fantastic advocate of public banking. I'm going to turn it over to Jake Varghese.
Hi, everyone. I'm Jake Varghese. I'm with the Public Bank East Bay and also many other groups in the East Bay. And I'm going to talk a little bit about AB 857. Let me go ahead and start sharing real quick and we'll get the slide deck up. Can everyone see this?
Can you make that larger, Jake?
Yes. How's this?
Much better.
Okay, great. All right. So I'm going to keep this really short so that we have enough time for as many questions as possible. So AB 857 was passed in 2019 as the California Public Banking Act. It provides a way for local governments to form public banks. These banks are regulated by the California Department of Financial Protection and Innovation, which used to be called Department of Business Oversight, or DBO. These banks are bound by the same financial and regulatory requirements as commercial banks, plus they're also bound by the Brown Act and the Public Records Act, which gives them much, much, much more transparency than any private bank will ever have. They also require FDIC insurance and collateralization on all deposits. And they require local agency sponsors of a public bank to create the viability study and the business plan. A local agency sponsor is basically just a city, a county, or a combination of both of them. It could actually be multiple cities or multiple counties combined to create the jurisdiction for a public bank.
Jake, could I ask you to slow down just a little bit as you're going through this?
I was just about to pause real quick and see if anyone has any questions. Cool. So AB 857 will actually strengthen local banking. The reason is retail shall be conducted in partnership with local financial institutions. This is a direct quote from AB 857. What it basically means is that AB 857 public banks are forbidden from competing with local financial institutions. They are actually designed to be partnership banks, and local financial institutions include CDFIs, credit unions, community banks, and regional banks. And I believe they are any bank with under 5 billion in assets, which basically means no Wall Street banks are allowed. These banks are allowed to work in tandem with the public bank through what's called participation lending. What that means is, let's say there's a credit union in Humboldt County, and there's a company there that wants to tool up for their manufacturing and double their capacity, and it would cost $40 million. Well, most credit unions can't finance $40 million. They can barely finance $10 million. So this is where the public bank will come in and help that credit union or community bank finance that $40 million loan by splitting it with them. They'll take care of whatever they can take care of, and the public bank will take care of whatever they can take care of. And this way, the loan stays in the community, the profits stay in the community, and none of it goes to Wall Street. And it allows the community and regional banks to service more loans and lose less business to the Wall Street banks. So the public bank can also originate loans and sell them to the local financial institution if necessary. But what's probably going to happen the most is the other way around, where the public bank will purchase loans from the local financial institution, thereby freeing up equity so that they can make more loans again in the same year, instead of waiting for the loan payment to be repaid so that their equity builds up and they can make another loan. Humboldt County can actually be a depositor of public bank East Bay. So how the jurisdiction works is the jurisdiction of where the public bank is allowed to operate is coterminous with the local agencies that set it up. Local agencies are, again, any city or county. So the public bank local agencies will probably start out with Richmond, Berkeley, Oakland, and Alameda County. And in this case, Humboldt County can become a depositor of the Public Bank of East Bay and get many of the benefits of the public bank, because now they become a depositor local agency, which can then have the Public Bank East Bay help with credit unions and community banks inside of Humboldt County. So this is a way to strengthen the credit unions, the local financial institutions of Humboldt County, and strengthen Humboldt County's own finances by being able to finance many, many pieces of infrastructure with way less financing fees and credit and interest. So these are the political endorsements for AB 857. As you can see, it's nearly everyone, and this isn't even a complete list. So there's like 50 more on each of these. Yeah, that's it. So if anyone has any questions, I'm happy to take them.
So thank you, Jake. I do want to just point out that the city of Eureka is one of the endorsers, as was, now we are, Humboldt County is showing up for public banking in a big way. I'm also going to really, in a nutshell, from my perspective, really the talking point, the real takeaway. Jake gave us a lot of information, but the takeaway on 857 is this. Number one, it's the law. Jake and I and other activists in the California Public Banking Alliance who worked with progressive legislators literally introduced this bill in one session. It went through 3 committees in the Assembly, then passed the General Assembly. It went through 3 committees in the state Senate. Then those got reconciled, literally passed on the floor of both, went to Governor Newsom's office, who signed it. in one legislative session. For those of you who are engaged in politics and have been engaged in activism or advocacy, let that sink in, that in one legislative session, we were able to pass that bill. Remember, 857 is for local or regional public banks, up to 10 local or regional public banks. We are currently working with the Department of Financial Institutions, or formerly known as the Department of Business Organizations, to promulgate the rules for those local and regional banks. And I gotta say, Jake, Paul, my read is, they're playing it straight down the middle. They're not making it any harder to create a public bank, but they're not making it any easier to create a public bank. So that's local regional public banks as best understood by 857. I'm now gonna turn the mic over to Paul Pryde. Paul is a semi-retired policy consultant who has spent more than 40 years working on banking and credit issues in low-income communities. Way back when, he ran a social investment fund that put money into the nation's first community development bank. More recently, he ran a consulting team that helped start a small business finance program for the United States. I want to join me in welcoming Paul Pryde of Public Banking LA.
Well, thank you, David. It's a pleasure to be here. I want to talk a little bit about what you might call Public Banking 2.0, a bill that was originally AB 310, which started out as an effort to transform the state's industrial infrastructure and economic development bank into the equivalent of the Bank of North Dakota, the state level public bank. That effort has resulted in now the feedback from the state has resulted in now having to change plans a little bit. We ran into three problems when it came to converting iBank into a public bank, a depository institution controlled by the state and using state funds to support lending for infrastructure and the like. One was public officials' severe risk aversion. The fear was that the public bank, this transformed iBank, would make loans that would be risky, and the state and localities in which were depositors in the bank would lose money. So that was one fear. There's another fear that's sort of unique to the time, and that was a fear of what you might call, what bankers call, illiquidity. That is, we had originally asked that a significant portion of the state's pooled money investment account, which is a pooled money fund which holds local funds as well as some state funds, a significant portion of that, or a small portion of it rather, be used to be put in the public bank. The problem, according to state officials, was that given the budget stringency under which so many localities find themselves right now, the amount of money in that fund would be drawn down so rapidly as to make putting it in the public bank, a restructured iBank, an infeasible idea. In other words, they were afraid to put money into iBank because of risk, on this restructured iBank because of risk on the one hand, and the need to draw down money to fund local operating expenses on the other. And there was a third reason. As you know, as David pointed out, 857 passed, not by huge majority, not by a huge margin, if I can say that euphemistically. And there was some concern, why are we doing this now when we haven't established or tested any 857 banks? So the appetite for passing a new public banking bill, as we found out, was not great. So what did we do? Well, what we decided to do was shift focus a bit. Right now, AB 310, which is now AB 1177, is a joint effort by the California Public Banking Alliance and the Service Employees International Union, first to create a new CalLIFT program. What is CalLIFT? CalLIFT is a program that would be sponsored by the state to provide no fee financial services to the unbanked and underbanked. Importantly, the legislation would specifically allow 857 banks to offer this CalLIFT account. So a CalLIFT account would allow low-income people, employees that were underbanked or unbanked, to make deposit in participating lender, depository institutions, pay no fees, and have an associated debit card. They could also use that account for electronic funds transfers to payees, such as creditors and the like. So that's step one. Associated with that is an effort to create is a budget request of about $385 million. Part of which, I think $20 million would go to helping states and the localities rather, establish 857 banks. As you know, in order to establish an 857 bank, you have to have a business plan of, I think it's called a viability study. Those cost money. And so we're asking the state to put up money. We're going to be asking the state to put up money to fund the viability studies / business plans for 857 banks. So there's also money in this budget request to provide technical assistance to community development finance institutions and community development corporations who want to increase their lending by associating themselves and collaborating with 857 banks. So that's the new form which this state level effort is taking right now. Looking forward, we're going to be talking to SEIU and some of our other collaborators about how to make sure that the lending, which is a necessary component of any public bank, is made less risky. Let me say on a personal note, it is highly likely, well, not as a personal note, it's just personal because I helped worked on this program. It is highly likely, I suspect, that the program that gave iBank about California $168 million to guarantee small business loans 10 years ago in the Obama administration is going to be reauthorized at about $10 billion, of which California would get about $1 billion out of the new stimulus package. That's expected to support about $10 billion in new small business lending. And one of the things we're looking forward to is working with our bank. We're not sure legislation is going to be required to make sure that 857 banks have a role to play there too. So that's sort of a summary of where we are right now. It's been a sort of a dynamic process, shall I say, full of uncertainties, some reversals, and some progress. But we look forward to continuing.
Thank you so much, Paul. I'm going to take the opportunity now just to handle a few questions that I've been monitoring and that Ruthie has been helping us with. The first one is an open question coming from Eli, who asks, a curiosity about how public banks relate to and may be different or the same as postal banking. And I'll invite either Paul or Jake to handle that question.
As I understand postal banking, which existed for quite some time up until the early 60s, as I recall, and I'm old enough to remember when they still existed, postal banking really provides the financial services for the unbanked and underbanked. That's what a new version of postal banking would provide. It would do much less on the lending and credit side than we hope 857 banks will be able to do, and a state level bank ultimately will be able to do. For example, we know we've got to transform the economy of the United States into a green economy. Postal banking is not envisioned as a big player there, although state level banks and a network of public banks nationwide would, I think, have a major role to play there.
Thank you, Paul. So folks may have noticed that James wrote in about the Federal Reserve as a public institution, and I answered in the chat that the answer is that the Federal Reserve is actually both. I said, while the Board of Governors is an independent government agency, the Federal Reserve banks are actually set up like private corporations. Member banks hold stock in the Federal Reserve banks and earn dividends. So is it a public bank? No, it is not. Is it a public entity? Kind of, sort of. I'm just going to ask Jake. I see Paul shaking his head vigorously. Jake, do you think I've overstated that, or have I said that about right?
Yeah, that's pretty much it. I mean, there's that one caveat that the Federal Reserve was created by an act of Congress. So
Correct.
we can fix it if we wanted to. But, just as Dick Durbin said, the banks run everything. So I don't know how it's going to be.
Jake, while you're off mute, I will say that Scott wrote in specifically to ask you to clarify or go a little bit deeper on the question of the savings that are associated from avoiding some fees. Can you talk a little more about that, please?
Yeah, I mean, the fees are, not going to be that much, maybe a couple million here and there, but really it's going to be the interest. So
can I just stop for a minute and just say, did you hear what Jake just said? A couple of million here and there. It's not very much money, he says. Please continue, Jake.
I mean, compared to all the money in California. But yeah, so I mean, the real thing is going to be the interest, and even just simply buying out all the debt of cities that they have now and lowering the interest can save cities like ridiculous amounts of money, just right there. Then you have, the financing of new infrastructure projects. So, once we have a public bank, we don't have to go to the bond market and ask for, 5, 6, 7, 8% bonds to finance a road. We can just go to the public bank and get the financing. And Bank North Dakota actually provides financing for infrastructure to all municipalities between 1% and 2% annum. I think it's over 10 years. And they just did a water project where the hydrofrackers basically screwed up the water. And so they just redid the entire water pipeline it was like a $15 million project. I mean, it's out there in North Dakota, so it's not going to cost that much to go through the land, but $15 million, it redid like almost 15 miles of pipeline for water. So it can save us a lot of money. And that's just for the simple financing things that we need now. Just remember, it's a public bank, so it can finance what we need.
Like
So,
climate change solutions,
exactly,
like
the Green
affordable housing,
Deal,
like education for our children.
Yeah.
Like
basically, the way I say it is,
this democratizes finance. I'm not joking.
Yeah, basically the way I say it is, what problem needs money? Okay, that's what public bank can help with.
Well said, Jake. So I want to continue to go down and answer a couple of questions and solicit some comments. Michael Brennan, hello, Michael. Michael is with the National Public Banking Alliance. He writes in, for clarity, the iBank, despite being called a bank, is actually a revolving loan fund and not a bank. The legislation would have converted the iBank into a depository institution, actually making it a, quote, public bank. Paul, did Michael get that right?
Absolutely.
So
a few words is correct.
Yeah, that's right. That was well done. And Lisi writes in with a question. Could someone elaborate on the ways that the public bank can't compete with other financial institutions and why?
Yeah, this is actually kind of the difference between postal banking and public banking. Postal banking is retail, public banking is wholesale, really. We don't actually want ABA 57 banks to have retail operations. We don't want just regular people going in there and getting deposit accounts and checking accounts and things like that. Well, that's what the local financial institutions, the credit unions, the community banks are for. Let them take care of the servicing of the financing, and the public bank will take care of the back end and making sure that they don't lose deals to the major banks and keeps the profits inside of California or inside that region. So the public bank would be able to, the competition part, sorry. So that's what that means. It's basically saying that, let's say if we started in the East Bay, we don't want an ABA 57 bank in the East Bay to offer checking services and saving services and payroll services and merchant account services to everyone in Oakland or everyone because we already have banks that can do that. So that's the competition part. That means instead of us offering those services, we partner with those banks to get those services maximally distributed to the entire area so that as many people as possible can get the financing and use those services. So that's the main part, the competition part. It just means we don't want to offer our own mortgage loans or offer our own car loans. We'll let the smaller financial institutions deal with that.
And thank you, Jake. And I also want to lift up Susan Harmon, who wrote to me privately, but Susan is one of the longtime public banking advocates. She was there at the very beginning. And Susan reminds us that postal banking is a form of public banking. It focuses on the unbanked and underbanked. So we are absolutely supporters of postal banking in the California Public Banking Alliance movement, but it's a difference in who the depositor is. And because our county treasurer, John Bartholomew, is in the crowd, Jake, I just want to make sure that I'm clear, you're clear, that we're all clear that the East Bay public banking effort is imagining and hoping to allow jurisdictions like ours that are too small to be able to capitalize a public bank, that the anticipation would be that Humboldt County, for example, could become a depositor in the public bank in the East Bay.
Oh, definitely. We are definitely building it so that obviously Humboldt County will be welcome, but every region in Northern California that needs to have that kind of service, we want them to come to us and say, here, we want to bank with you. Can you provide those services for our local? And we'll say, yes, of course. That basically helps scale up the bank and pushes the money out further. So we definitely want as many places to be depositors and equity partners as possible. So if Humboldt County is ready to do that, come on down.
So Xavier writes in, howdy, I'm not from California, I'm from Oklahoma. Actually, but very interested in public banking and has a few questions. When it says retail would be conducted in partnership, what exactly does that mean? Xavier continues, I know that the Bank of North Dakota doesn't need FDIC insurance because it doesn't do retail. So why would these banks theoretically? As I understood it, a major advantage of banking would be low interest and low financial services and small scale loans to low income Americans. So I'm curious if 857 serves for that or not. And Paul, I'm wondering, as somebody who's been in this world for so long, if you could take that question.
Yeah. See, there were several parts of it. Let me respond to one thing. One of the issues with well, first of all, 857 banks will be like wholesale banks. They will provide. Now I've forgotten the question. Would you repeat?
Sure. So when it says retail would be conducted in partnership, What does that mean?
Yeah, it essentially means that we don't want to do we want to add value with 857 banks. Don't want to do things that existing banks can do. Now, there are two problems that existing banks run into when they're trying to serve the underbanked or unbanked. One is risk, and the other is cost. That is, sometimes these smaller transactions cost a lot. These smaller accounts cost a lot to make, to manage rather. And so on the retail side, an 857 bank could create the infrastructure needed to provide a new retail product, a new type of service for the unbanked or underbanked that's provided through a network of community banks, and sort of allow them to share costs of that platform. So that's one example that reduces the cost. The other thing that, and we know this to be a big problem on the lending side, is that a lot of loans, a lot of the unbanked or underbanked or even small businesses, which are under stress right now, are not considered creditworthy and too risky for community banks to make loans to. Well, by buying part of a loan, you can reduce the risk, or an 857 bank can reduce the risk that a community bank has to have on its balance sheet. Let's take a $100,000 a loan to a small business with only $100,000 worth of assets. Well, a community bank may not want to make a $100,000 loan against $100,000 worth of assets, because if the assets decline in value, it won't get its money back if the loan goes bad. The community bank could keep $70,000 and sell off $30,000 of the loan to a 857 bank, therefore reducing its risk to the amount it's willing to handle on its balance sheet. So that's the way you can handle or create a partnership or collaboration on the retail side. That's one thing.
Thank you, Paul. Morgan March writes in, and I happen to know Morgan. He co-coordinates worker-owned Humboldt for Cooperation Humboldt. As a Swedish immigrant, he's got a good question. Morgan asks, are public banks like the central banks of Europe? If so, how do they differ?
The central banks of Europe create reserves. Well, let me put it this way. The European Central Bank, let me put it that way, creates euros, creates reserves, which allow and purchase euro-denominated assets and lend against those on behalf of commercial banks. So the public bank would not be like our own central bank, the Federal Reserve, in its ability to create reserves which allow banks to increase their lending or to essentially prop up the entire financial system when things go bad. It wouldn't have those sort of powers, but it would be able to provide a platform, if you will, for allowing community banks, which are often too small to incur some of the risk and cost of serving the markets we want, that we know are underserved, to allow them to do so profitably and safely. So as I pointed out earlier, having a region-wide public bank might allow you to create a platform which provides a shared service to 50 or more community banks with respect to a specific product that the underbank need.
Well said, Paul. And also, just because I see that Ross Welch of the Arcata Economic Development Corporation, a powerhouse CDFI here across multi-counties, want to let you know that the legislation that we're looking at, as I understand it, about 25 million of that would be specifically earmarked for rural areas for technical assistance. Did I get that right, Paul?
Yes.
All right, so Ross, you and I need to talk about that, my friend, and make sure that we lobby to get that passed. Jake, I've got a series of questions for you. I'm going to ask them back to back. The first one is, does East Bay already have its license? And secondly, East Bay is a pretty large service area, municipal, county deposits, et cetera, et cetera. What is the minimum to capitalize the bank, and what are y'all thinking that the capitalization requirements are going to be?
Okay, for the first question, no, not yet, but we have already started the process of getting the license. We've hired the lawyer to basically do all the preliminary work and talk to the elected officials and get everything set up to get the business plan written. So we have started on that, which is awesome. That was like our first really big milestone. We almost had a party, but we were in the middle of COVID, so we couldn't. And so the asset side. So the talks that we've had with several financial professionals, and I think, Paul, you were one of them. So to start a bank, I think in California, I think it's $15 to $20 million minimum is what's necessary to start it up. But obviously, we want it to be as powerful as possible, because the reason a revolving loan fund isn't that powerful is because it doesn't have the 10x leverage that a bank has. So that's why we want a bank. And we want the bank to be filled with capital as much as we can fill it with in a reasonable amount of time, and that with reasonable assurances that, you know, we're not just going to lose it. So what is that number? I don't know. All the money in Alameda County and Oakland and Berkeley and Richmond, maybe. I mean, that would be my dream number.
Well, so I want to jump in and ask you, because you've been in this world a lot longer than Jake and I have. In your estimation, could you just ballpark for us what you would imagine would be the minimum amounts of deposits to really be able to capitalize a public bank or any bank?
Well, you know, as one friend of mine once said, banking is a scale business. So the larger the bank, the better able it is to achieve sustainability. When we were talking about the state bank, looking at a bunch of research and talking to people who've been in the banking business and other friends, talking to people across a range of financial platforms, came up with the figure of $3 billion for the state bank. My feeling is that our $300 million in capital for a regional bank or a local bank is a good place to aim. Now, I think the 10x figure is actually is a rule of thumb, but you can actually do a lot better than that. And one of the things that we're trying to do right now is trying to find a way, and we've had legislation introduced to this effect by at least one congressperson, to get a federal guarantee on loans, almost any loan made by an 857 bank or a state bank. That would reduce the amount of capital required to support its assets so that you could have as little as 4% capital rather than 10% capital. It would also mean that a bank would automatically be a safe place to deposit money and most likely to be very profitable. So we think with a $300 million worth of capital, you could support anywhere from $3 billion to $6 billion in total assets. That would mean that any state or locality or any locality would feel entirely safe putting its money in the bank because it would know that if any of its loans went bad, the federal government would be there to pick up the loss.
Thank you. Michael Brennan, again with the National Public Banking Alliance and also a fellow with the Democracy Collaborative, writes in, how do y'all see public banks as part of the solidarity economy? How can they support the development of worker-owned businesses, tenant-owned housing, or member-owned credit unions? So first of all, Michael, good use of the contraction y'all. Gotta say that. Secondly, a brilliant question, because remember that the solidarity economy is a framework for post-capitalism. The Solidarity Economy Network, of which I am the co-coordinator, has an explicit clarity that capitalism has a definition. The private ownership of the means of production, that goods and services are produced for commodity, that are there, profit maximization is everything, that a labor is also a commodity that's bought and is paid for, and everything is allocated by the market. I use that definition because those characteristics, saying it that way, you'll find that in any basic introduction to macroeconomics in any institution, College of the Redwoods, Humboldt State University, or anywhere else. Saying it that way, it sounds fairly innocuous. But think about the implications of unending growth on a finite planet is literally the ideology of the cancer cell. Capitalism, for all its ability to produce, does not do a great job of equitably and fairly distributing it. And left unchecked, it will literally destroy the planet. We are commodifying Mother Earth faster than she can replenish herself because it provides short-term profits. The solidarity economy puts people and planet before profit. It does not say eliminate profit. It does not say eliminate entrepreneurship. It says to put the economy in service of the people, not people in service of the economy. It's why we say it supports Main Street rather than Wall Street. So Michael, the whole point of public banking, it's one of the ways, one of the very concrete policies that the Solidarity Economy Network supports in order to transition away from the ecologically destructive and socially and racially unjust economic system and political economy we have to one that is fair, ecologically sustainable, and ultimately helping to create the world that we want. So public banks could absolutely be used to support community land trust, tenant housing, climate change work, universal basic income. Literally, as Jake said earlier, I thought it was really brilliant. What can public banks be used for? Anything that the public wants. Like, we really need to start imagining that public banking democratizes finance. It actually allows we, the people, to actually govern ourselves. So, Danny Kelly, the chair of the Democratic Party, writes in with a hard question, and this is serious. Paul, Jake, I'm going to ask one of you to take this question. How would the governance of a public bank be structured? How would it be different from private banking boards? How would it differ from the Federal Reserve Board?
This is actually pretty interesting. For the East Bay, we actually have a specific vision for how our board is going to look like. And then we checked ABA 57 and it's clean with that. And then we checked the DPFI is actually in the process of making or formalizing the rules around ABA 57. So I was looking through that, and they actually expect 20 people on the board, or maximum 20 people on the board. We were going to have 15. And they also expect that not everyone on the board is going to be an expert in banking. They want community people on the board too, which is exactly what we want also. So what we were going to do is actually make it so that there was 5, 5, and 5, roughly 5 banking professionals on the board, 5 city/elected official chosen slots, and then 5 community representative slots. So that would represent, Green New Deal, African American business entrepreneurship, housing, and everything else. I mean, I'm blanking on all the different things, but there was going to be a set slots for those kinds of advocacy groups on the board, and we were also going to see if it would be okay if we can find someone who is a banker but also an advocate, so that we can basically have the banker part of the board be also advocates for the community. So we basically have it all covered. So that's how we're hoping the governance could go. Again, it's all about the transparency of the institution, the enforcement of the governance documents, and the design of the mission and charter. So we have, if you go to publicbankeastbay.org, under our resources section, we have our preliminary government structure and mission outline there that we're going to try and put into the charter of the bank as we're formally putting the bank together. Hopefully.
Paul, you have anything to add to that question?
No, I think Jake pretty much covered it.
Yeah, I did too. So Christopher writes in with a great question, and that's to either one of you. Do we know how many licenses are at the point of process where East Bay is?
None.
About roughly in the California Banking Alliance, if we had to say, oh, here is at the front of the pack, really sort of leading the way, besides the East Bay public banking effort, where else are we seeing that level of momentum?
San Francisco and LA are probably the closest. San Francisco is actually trying to create a revolving credit fund or revolving loan fund, and then see if they can get that and morph it into the public bank later. And then LA is still trying to get they've got their supervisors, I think, on board, and they're trying to get their city council and some other things they're trying to get together. But they're not too far behind us. They're pretty.
Well, Paul, you're from LA, so I'm going to ask.
No, actually, I'm in the Bay Area.
Oh my goodness! I'm so sorry. Trinity got us connected, so I just made an assumption.
Trinity is my boss, so to speak.
Yeah, Trinity here, she can tell us.
For everybody who is here, let me just say, Trinity Tran is all of our boss. Those of us who are working in the public banking movement, right? So thank you for that, Paul. But I agree with Jake. I mean, look, East Bay is at the cutting edge. Right behind is San Francisco, working on a revolving fund, which is kind of sort of a public bank, but not nearly as powerful, quite bluntly. And LA is moving right along. It feels like those are the three, Jake, where we ought to be tracking.
Yeah, definitely.
So Deb writes in with this question: regarding the solidarity economy, has there been talk of funding public banking through retail deposits? For example, using funds currently directed with 401k accounts.
The interesting thing about ABA 57 is there is no limitation on where we get the capitalization from. There are limitations on who we can take deposits from. So we can only take deposits from cities and counties. But it looks like the capitalization can come from almost anywhere. I don't know how easy it's going to be to get 401k accounts in there, because they're going to want a return, and I don't know how we're going to be able to give them a return on a public bank because of how we set it up.
Do you want to jump in on this? Because I've got
one of the things that the new version of AB 310, originally designed to transform the iBank, includes is a provision that says 857 banks are expressly allowed to take deposits under the new, it's called CalLIFT program that the SEIU has been pushing. So that would be a retail deposit program. So in that case, you would be able to take deposits, FDIC deposits under that program, deposits of individuals that ordinarily you wouldn't be able to do as an 857 bank. However, because commercial banks, privately owned commercial banks, aren't offering that service, it's not considered competition.
Right.
That's
And thank you. Oh, go ahead, Paul.
No, that was it.
So, and the other thing, so thank you, Jake and Paul. I agree with everything that you've said. And Deb, I also want to add this. Remember, we're talking about 857, which specifically set up a depositor, a governmental depository bank. 310, we're navigating that. But I'm very excited to share that at the national level, Representatives Tlaib, AOC, and others are moving forward on opening up the space where there might be public banks that could actually accept retail deposits as well. So the public banking movement is actually growing, it's broadening and deepening. And your question, I think, is incredibly important, because at the end of the day, if we actually start to think about the fact that it's our money and that actually we, the people, are supposed to be able to help to structure how our political economy works, everything opens up. And it does, my answer literally begs Jeff Olson's question, because Jeff is a colleague in San Diego who writes in to say, in San Diego, our projections are so rosy, they seem unrealistic. How can we keep from promising the world? In other words, Jake, Paul, am I being too optimistic when I talk about democratizing finance? Or I'll just ask either of you or both of you to reflect on how you heard me answer that question.
Yeah, I don't think we can. I mean, that's the crazy thing about the public bank solution is I don't think we can be unrealistic. I mean, it really is. If the problem requires money, this thing can help with it. And that's like the best part of the whole solution. Like, that's why actually I'm part of the public banking movement, is because as an engineer, you know, when I look at the society and seeing all the different problems, I realize I can solve all the different problems individually, but they all need money. And that's the core, that's the underlying problem that needs to be solved. That's why I came to the public banking movement, because it really can help with everything. I mean, everything that needs money, this can help with. So yeah, Jeff, I mean, you're gonna have to promise the world, buddy. I mean, I don't know.
What about it? Are Jake and I being overly optimistic?
No, I don't think so. You know, I've been at this a long time, and it seems to me that you can make a compelling argument that taking money from the American people and lending it back to the American people, especially those who haven't had the opportunity, is a great business, especially if you structure the loans to meet the repayment abilities of the people you're lending to. I used to tell friends of mine, banking is the only business where if the product doesn't fit the customer, you get rid of the customer rather than changing your product. Public banking says, we will create products, loan types, and structures that meet the repayment characteristics of our customers, which means we have low default rates and low interest rates. Because after all, interest rate reflects risk. And if there's no risk because you've made loans easier to repay, the interest rate can go down. So there's a lot of ways that conventional banking makes no sense to me. And I've taken a long look at it for a long time. So no, I don't think you can be too optimistic.
So another question that it's a comment really. James writes in again to say the Federal Reserve creates money when it, quote, prints money. That is, sends out little packets of electrons that show up on a screen saying that the entity just received a certain amount of money. What makes it money is that it is the US issuing or delivering the funds. Again, Paul, does James have it about right? How money is created digitally?
Yeah, I mean, it's essentially debits and credits. Money is accounting, period. End of story. Writing up accounts, writing down others.
So Paul, say that part again, because for me, this was like when I finally intellectually cracked that nut, it actually made me rethink like how money operates.
The most important statement probably made in this entire thing.
You're right, Jake? I mean, like Paul just said it like so casually.
Yeah.
Say it again, Paul.
Money is accounting. That's all it is, debits and credits, electronic accounting, writing up certain accounts, adding and writing down others. There is no there beyond electrons. It's just
And that's
electrons going back and forth.
That's why we have to build a movement that demands to democratize money creation. We could literally restructure this economy peacefully. We could literally revolutionize the entire society without having to throw a rock, fire a bullet. They're like the most peaceful transfer of the most power you've ever seen in the history of the world is possible by democratizing finance.
Let me turn to Nancy. You can't do it unless you do that. You cannot leave the financial system as it is.
Thank you, Paul. Nancy Price from Davis, California writes in to say, what would be the process for Davis and or other county cities and the county to apply to deposit funds in the East Bay? She says, I presume the service cost would be a percentage of the deposit. Jake?
Those technical details we haven't figured out yet, but the answer is, yeah, we will definitely help you, and it will be cheaper than what you're doing right now. And it will also give you the benefits of being able to have the local financial institutions in your area be able to bank with the public bank and become a partner with that, so they can, you know, basically not lose as many loans and financing opportunities to the major banks.
And so Michael Brennan writes in, because I'm looking at the time, I want to make sure to get to as many of these as possible. Michael Brennan writes in to say, check out this critical response to the question about public banks should do everything. Public banks are just one tool in the public money toolkit, not the whole game. And he puts a quote in to Business Insider article. And I got to say, I completely agree. I don't think that either Jake or Paul would disagree. What we're saying is democratizing the money is the whole game. Public banks are, in fact, a tool to do that, but they're not the only one. But the game is to understand what Paul said. Money and the creation of money is just accounting. And once you understand that, there are lots of tools that can be used.
Yeah, I mean, if you want to do the ultimate democratizing of money, I would say, okay, we're going to take the Federal Reserve, we're going to get rid of the Board of Governors, make that a public bank, and tell it to tell all 50 states to make a public bank and finance it with $1,000 for every citizen for their equity. And then we're done. Then we just democratized everything. But for now, we're just going to start, you know, you start local and grow global.
I want to lift up a retired HSU professor, Kate Lancaster, who is also a Cooperation Humboldt core team member, who writes in with a profound question. Kate writes, I imagine that the commercial banks find public banks a threat. How is that being addressed or minimized? I'm going to ask both of you gentlemen to address that question.
Well, let me start by saying that the banking industry can be bifurcated into 6 big banks and everybody else. A lot of the smaller banks are looking for ways to survive in a time of increased competition, increased cost. And you can find ways to convince them that a public bank is the best thing that'll ever happen to them. And the Bank of North Dakota is loved by a lot of community banks because it makes their jobs easier, safer, and more profitable. So one thing to do is to make sure that you say to community banks, what we're going to do is help you by taking on risk and costs you're not willing to take on or not able to take on. And the other thing is, we're not going to take your customers away from you. Your retail depositors are going to remain yours. So you can come up with the structure of a partnership that community banks will love.
Yeah, we're going to, I mean, even the sales pitch of we're going to get you new customers. You're not going to lose as many customers to those big 6 banks that you constantly lose, you know, your financing to. And then one real quick to Xavier from Tulsa, there's actually a public bank in Oklahoma. It's owned by the Native American tribes there. I forgot which one. If you Google it, you can probably find it. They've been around for a while, and they're actually, I think, maybe responsible for being the reason that the Native Americans in Oklahoma have some of the highest economic output of all Native American tribes in the country.
Well, that's then I stand corrected because I think earlier I said, in fact, I know earlier I said that the Public Bank of North Dakota was the only one. So I'm happy to be corrected.
That's the only state one. This one's only owned by the sovereign nation of, I forgotten what that tribe is called in Oklahoma, but it's
Hmm.
it's for the entire. It's actually, I think it's across multiple tribes in Oklahoma. So they think they came together, and I haven't looked at it in a while. So sorry.
Again, I look. We're all teachers. We're all learners. So I appreciate being corrected and getting that bit of information. I also think it's important. I want to again lift up Susan Harmon, who actually answered the question in the chat, because I thought we sort of touched on it, but I really want to underscore, because I think she answered Kate's question beautifully. Susan says that we will partner with local financial institutions. So the point here, y'all, is that the public banking movement is absolutely a threat to Wall Street, but Main Street and what in common parlance are called community banks or credit unions, they are actually our friends. And we believe that both credit unions and local community banks should and will become big advocates and proponents of public bank as soon as they actually begin to see that it is a different type of banking business and that we're actually doing it differently. So that, thank you, Susan, for that point.
Yeah, and my answer to Kate, coming from the activist space, is yeah, that's just another fight we're gonna have to take on.
Right, and I'll tell you this, y'all, we're not gonna sneak up on Wall Street. We're not gonna sneak up on the right-wing fascists. Let's just admit that we're actually in a, and here's the thing, y'all, on the left, too often, we constantly get involved in telling the story of the battle and the minutia and the policy wonkishness of it all. And policy is important, and we've got to be able to do that when we're legislating. But here's the thing that the right wing does well and the left wing needs to learn. And that is, instead of constantly being involved in the story of the battle and the minutia, think about the battle of the story. We're actually needing to talk about a bigger narrative. And y'all, we have a winning narrative. Our narrative is about kindness and compassion and love and sharing. Our meta narrative is a better meta narrative. And if we actually learn to talk about the world that we want and that there is a path to get to it, we will win. It's as simple as that. So listen, I want to thank everyone for an incredibly lively conversation. Thank you for using the chat so well. You know, again, we were frankly Zoom bombed by a bunch of horrific racists here in Cooperation Humboldt. I'm going to say this, y'all. I take it as a badge of honor that the local right wing is actually scared of what we're doing and trying to disrupt what we're doing, because we are winning. We are everywhere. This movement can't stop and won't stop. I'm going to give Jake and Paul an opportunity for some final thoughts. So Jake, the floor is yours.
I'm just going to repeat what I said before about the power of a public bank and why, you know, everyone really should be ridiculously excited about this and making all of their elected officials focus on this only if they can. And basically it solves pretty much any problem that requires money. So every single problem you can think of that we're going to need to solve in society is going to require money in some form or fashion. And so this helps smooth that out so that every time we need to try something, we don't have to go find the money. We already have a place that has it and can give it to us. Even if it's just a loan, it's going to be a very small, low interest loan, which is still easier to pay off than going to the bond market or trying to get, you know, the legislature to give us a grant or whatever we need. So that's my big pitch for everyone, is the power of the public bank is necessary. So please, 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 please fight for it.
Paul?
Yeah, I want to echo what Jake just said. Banks in this country, the banking system has what, close to 20 trillion in assets. I don't see any reason why we can't have a public banking system which has 20% of that or 40% of that. We need to think big, and we have to remember that you can't change the world without changing the financial system.
Thank you to Jake. Thank you to Paul. Thank you to all of you who came here today. And I want to conclude once again by acknowledging the fact that this forum was co-sponsored by Cooperation Humboldt and the Central Labor Council and the North Coast People's Alliance and the Democratic Party and the Green Party. When we find ways to work together across the progressive left, we are a supermajority and we will win. Good night. Peace.